Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. This one is geared to my new college graduates. So now it's towards the end of the summer. Hopefully you've started your career or you're checking out the companies that you choose to go and work with. I'd like to cover a couple of topics on how you can protect your credit, how you can start saving, and how you can manage and pay down your debt wisely. Okay, so let's dive in. Understanding that your credit score is just simply a snapshot in time of your ability to borrow money and pay it back on time. When you understand that concept, you can really play inside of the rules of the game of credit. Unfortunately, this game has been created for us, and so now we've got to figure out the rules so that we can win. So make sure that you pay your bills on time. I know this sounds so elementary, but your payment history makes up 35% of your credit score. So please make those payments on time. Understand that you do have a grace period. On your credit cards, if you pay your balance in full prior to your due date, you can eliminate paying interest on that credit card. Make sure when it comes to your credit cards that you are not overusing what's available to you. The magic number that I've been hearing for quite some time is to have your balances at 30% or below of your credit limit. And if you really want to maximize your credit score, somewhere between 1 and 7% utilization is your ultimate goal. Crazy, right? And if you're one of those people that just can't help yourself, every time somebody asks if you'd like to save 10% by opening up a store credit card, perhaps you need to consider freezing your credit with the 3 large credit reporting bureaus. So that is with Experian, Equifax, and TransUnion. The reason I'm recommending that you freeze your credit is it creates a disruptor, meaning that you have to contact all 3 bureaus to release that freeze in order to apply for new credit. So it forces you to think twice before opening up unnecessary lines of credit that can become a spending trap. And also be really selective on the credit that you do start. You don't need to open up a credit card with every pre-approved mailing that comes your way. So just know that your name has been sold to a lot of different companies and you are on this list because now that you have a degree, generally speaking, you're going to start your career, start making some good money, and you're going to be a good little borrower that will pay a lot of interest over time to these credit card companies. It feels nice to be wanted, but draw the line. You really do just want at least one bank-issued credit card with a really low APR, not just an introductory offer, that you can have for many, many years and build a long-standing history with. The longer you have that credit card, the better it's going to be for your overall credit profile. So those little store credit cards that have 25 to almost 30% APR, just avoid them altogether. And I was just reading in NerdWallet that the average interest charges that are paid in a year on credit cards is $1,155 in interest and finance charges every year. So please try not to use your credit cards as an installment loan and just feed it that minimum payment. You're not going to get ahead that way. And on installment loans, anytime you pay a little extra and even a day early, you are eliminating a daily interest charge, which means that money stays in your pocket and doesn't go to the lender. Okay, so how do we start saving, especially for like those larger purchases and for retirement? My advice is treat your finances like you would if you were going to run a business. So businesses follow a budget. Calculate your take-home income, and from there, know your numbers. You need to know what's coming in and what's going out. Unfortunately, when most people sit down to do a budget, they're actually just creating a balance sheet. And what that means is I'm showing everything that's going out. In past tense, a budget is for your future or upcoming spending. So this is where having a little bit of a savings balance in your accounts is truly important, because I'm going to suggest you set up auto draft payments. But if you don't have a cushion in your checking account, it could cause some really big fees. And if you have never experienced an NSF, non-sufficient funds from your bank account, it hurts. Depending on where you bank with, it could be $25 to $35 every time you are overdrawn, or meaning meaning you've overspent what's available to you in your checking account. And in 2020, friends, banks collected $11 billion in non-sufficient fund fees. So having a little bit of a cushion, a couple $1,000s in there from the start will really help you be able to set this up. So my very first suggestion is set up an auto draft where 10% of your take-home pay automatically gets sent to a different and separate account from your checking account. We're going to call your checking account your operating account. So that 10% will get funded immediately upon your pay. So a couple of things are happening. This is setting up or starting off your emergency fund, and you are learning to live off of 90% of your take-home pay. It's a really exceptional habit to get started from the very start of your career. So once you have greater than 2 months worth of living expenses set aside in this emergency fund, then I want you to reallocate this 10% every payday into a new account and set a dollar amount towards that goal and name that account. So what is your next goal? Do you want to buy a home? Do you want to travel to amazing places when you get to take your vacation? Do you want to start a retirement fund? Do you ultimately want to start a business? Name that account, what your goal is, and then any extra money that comes your way goes into this account, not into your operating expenses. So any bonuses, overtime, pay raises, tax refund, push it aside into these accounts before you learn to spend it. And over time, the more you make, the more you will spend. So start from your very first year of your career and you telling your money how to work for you, and pay yourself first. This 10% going towards your savings goals, going towards your longer term goals, and going into your retirement account. Start a 401k with your employer, and especially if they max that baby out each year. But think about it. If you put in 4% and they match it, so now you've got 8%, can you really live off of 8% of your income? Even with 30 and 40 or even 50 years worth of compounding, it may still not be enough. So with your next raise, put that money aside and start an IRA with a financial advisor. Even $200 a month, it will compound and grow and help you turn into a millionaire at retirement. And take my word for it, your wealthy older self thanks you. Okay, so let's tackle this third topic. How do you manage and pay down your debt wisely? So any installment loans that you have, reach out to those lenders and ask them if they offer bi-weekly payments. If you've never heard this term, it is an extraordinary way to slice a ton of interest and time off of your installment loans. So let's look at it from an annual basis. Let's say you pay your student loan, your car loan, or eventually your mortgage once a month. If your lender will allow you to set up bi-weekly payments, that means you're paying half every other week. And if you've ever gotten paid every other week, then you know that there's 2 months out of the year where you get that third paycheck. So following the calendar, there's 52 weeks. And if you are making half payments every other week, that means there's 26 half payments being made. 26 half payments turns into 13 full payments, but in 12 months. Most mortgage companies will set this up for you. And I know that some student loan companies and car auto loan companies have this option as well. So check it out. Nothing wrong with saving some interest and paying it off faster. So what else? Be disciplined to pay with cash and not credit cards. I know this is against what a lot of people say. I hear a lot of quote unquote financial gurus out there saying to use your credit cards for everything, build those points, get those reward dollars, blah, blah, blah. But if you know that you are not disciplined enough or not quite in the financial position to pay off those balances in full each month before that payment is due, you're going to be incurring interest charges. And then you're going to be where millions of people are at, unfortunately, with carrying a credit card balance month after month, year after year, as if it's an installment loan. Unfortunately, I see so many people just barely able to make above the minimum payment. And you guys, that means just a couple of dollars is going to pay off that principal balance on that credit card. But more importantly, with paying cash and not credit cards, you will spend less. If you have cash designated each paycheck towards fun stuff, and that's in your wallet, and you have to pull out of your wallet that fun stuff, you're going to create a disruptor and you're going to say, is this really where I want my fun stuff money to go? Is this going to bring me joy? Or should I spend it on what I'm going to be doing this weekend, or girls' night out, or whatever is going to be happening in your life before the next payday? If you put it on a credit card, we tend to forget about that purchase, and it's so easy to swipe. And that's where the problem lies, because 3 weeks later, you've got this big bill or a big balance, and you're like, oh crap, I totally forgot about that afternoon where we went splurging at the mall. So don't battle these large credit card balances with high interest rates just because it's so easy to swipe that card. And be cautious with those buy now, pay later options. I'm seeing it offered all the time when I'm buying online. They make it look so sexy that instead of paying $200 now out of my checking account or out of my credit card, that I can pay $15 a month. But you guys, if you miss a payment or if you're a day late, there's a ton of interest charged. There's a late fee and they will jack you around after that. So please be careful. And if you do that enough times, you might find yourself obligated to a number of monthly payments. And another tip I'd like to share is shop insurances annually for your home, for your auto. Some companies have great teaser rates for that first year, but they'll increase it drastically upon your renewal. And honestly, when it comes to auto insurance, the older you get, the more years you have of experience on your driving record. And the longer you have a clean record, you're less risk to insure. So shop those insurance rates. And if you're able to save some money, assign that money someplace else, because you know what happens if you don't assign it? It's gone. And side note, a lot of people don't know that your credit score has a big impact on your insurance rating. So if your credit score has increased from when you started with this insurance company, there's a really good likelihood that you qualify for a lower rate because of a higher credit score. Also, being a college graduate, a lot of times insurance companies will give a discount for that. And let me leave you with this little nugget of knowledge. Remember that you are just starting out. Your car, your house, your closet, build it up over time, not right out of the gate. Nobody's looking at a very young 20-something-year-old and saying, why aren't you driving a Tesla right now? You are not the CEO yet. So set the right foundation instead of the trade-off of just looking or playing the part, but not actually being the part. So many people finance everything and then spend their careers keeping up with paying off that debt. Start modestly, pay cash where you can, save your 10% income. And once you are the CEO, your money will continue to build your wealth rather than paying off debt. I wish you all the success in the world. And if we are not connected on social media, let's do so. I'm at Credit Christy on Instagram, TikTok, Facebook, and Twitter. And come see me at my YouTube channel at Credit Christy. And if homeownership is a goal of yours in the future, check me out on YouTube at yourloansuperhero.com. Thank you so much, my friends, for being with me again. And until next time, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christy on Instagram.